Hi, thanks for tuning in. This is the US Futures weekly chart analysis for the week ending 20th of March 2026. The first chart is the US dollar index futures. They pulled back a little this week in consolidation mode. You can see that price traded within the range of the previous bar for the whole week, and volume did reduce. It remained slightly above the average, but it was reduced over the previous 2 weeks of up volume. So this was the market trading in consolidation mode, recovering from the push higher, and it appears with the close just back slightly above this breakout line that the market is doing a good job to consolidate in this little zone in here. That'll open the door for an attempt to push higher in the future, I imagine, probably up to the highs of the range at least. I'm not sure if it will challenge the overall highs. I'm not expecting a great deal of resistance up here from the left. So it could do if the markets were really strong. But at this point, the market's pulled back within the range of the previous bar. It started to absorb supply, and supply was reduced. You can see that by the reduced volume. And that should open the door for an attempt to push higher. This is E-mini S&P 500 index futures. They continue to break down. You can see that price closed clearly below the previous bar's low this week, as it did the week before that. There's no great strength in this market, obviously. The market's rolling over. There was always an issue across the top here. I mentioned it several times that the market was going nowhere. And if supply did emerge, and you can see that here, supply has emerged, it would be unlikely the market would be able to absorb that supply, and it would cause the market to fall over. It's not really stretching lower at this point. It's just grinding lower, but there's no doubt that there's weakness in the market at the moment. The market's very reactive to what's going on around the world at the moment, and there's no obvious sign of support coming in. You notice that both last week and this week, there's been an attempt to move higher from the open, but the market has failed both times. Supply is overwhelming demand at this point in time. There's a stronger level that comes through here, which may be where the market's going to head to. These levels here aren't anywhere near as strong. That level there wasn't too bad, but prices really pushed below that this week, or it's at least threatening to do so. Should be a stronger level here around the 6,400. So we'll keep an eye on that if the market keeps pushing lower. This is US Treasury 10-year note futures, and they really did push lower this week. They broke below that level we've been looking at for some time, where the market had been really holding on through here. It really wasn't looking strong at all, but the market was reluctant to break down. And after an attempt to rise, which failed, price did break down this week, and it's moved down to the next lower level through here. I expect the market will attempt to recover in here. I don't expect the market will come down to the lows of the range, at least not immediately. I expect an attempt to recover at this level, sort of adjacent to this little bit of congestion here in the background. Copper price futures, they really stretched lower this week. They broke through this level adjacent, and they're moving down towards this breakout line in the background. You'll note that volumes have reduced considerably over the last 5 weeks. I expect this market will make an attempt to recover and consolidate at this level. So you may get a slight recovery and a pull back to this level over the next few days, or even over the next week or so. Gold price futures also stretched lower this week. may have perhaps overshot its level. I would have expected it to come back to that level. There is some congestion in here where the market may choose to attempt its consolidation. If not, I would expect market to come back to this level through here. That's the next lower level. That's a stronger level by the looks. I do note that volumes have now been below the average for 6 weeks. So this is not an active sell-off. This is the market drifting lower on a lack of demand rather than overwhelming supply. And there is a difference. There is some chance the market has overshot to some degree this week and may attempt to just pop up and consolidate around this level in here. If not, I expect the market will push down towards these lows here and attempt to consolidate at this level. The next lower level would take a really serious breakdown or further breakdown. Much more likely the market will attempt to consolidate sort of in here. Silver price futures, they also pushed lower this week and below the expected level here. There's not a great deal of adjacent support. You've got this last gasp level just there. So you may find the market will attempt to support in here. I would have expected a stronger attempt to consolidate at this level, but it hasn't done so at this point. And similar to gold, the stronger level below is in here, which is a fair way down. Would take another breakdown for the market to get there. So I think the most likely place for an attempt to consolidate over the next little period is in here, where I've marked this circle. It should be pointed out at this point too that the market's very reactive at the moment. It's not really trading with any intent. It's certainly not being proactive. It's being reactive to the events that are occurring around the world at the moment and the uncertainty that's taking place. And that causes the market to trade in an erratic manner. It's not as clear cut as it would normally be. This is light crude price futures, and they've been on a bit of a tear lately with all the issues going on around the world. The market pulled back a little bit this week and did consolidate, closed very slightly as an up bar for the week, but it's really consolidated as an inside bar within the range of the previous bar. Volume was reduced as price pulled back. That's telling you that selling pressure was relatively low. The market's consolidating at this level in here, which is sort of what we expected. And the market's finding that supply is relatively low. So I expect the market will continue sideways in here or may even attempt to break out if things deteriorate overseas in the near term. Into the currencies now, and you've got the euro recovering very slightly this week as the US dollar pulled back to consolidate. The market's recovered back to this level, but only barely. It's not particularly strong at this point. You can even see that on the push higher this week, volume reduced to about the average. So there was no great amount of demand behind this move. The market's really just floated up, trading the inverse to the US dollar. I imagine the pound will be the same. Yeah, it's very similar. Mid-bar close. Perhaps a slightly stronger positioning than the euro, but volume reduced to just a fraction above the average. The mid-bar close is certainly not strong. The market's just holding on at this level, trading the inverse to the US dollar. Japanese yen currency futures, and they did attempt to recover as we kind of suggested last week, and it does appear with the close being poor down by the week's low, suggests that it's not going to be a successful recovery, and it's possibly going to threaten those lows next week. We'll look at that if it occurs. Aussie dollar currency futures continue to trade up near their highs. Wasn't a particularly strong bar this week, but it did trade within the range of the previous bar for the whole week. Volume did reduce, similar to the other currencies. The market's holding on pretty well up there. It's very close to its recent highs, despite the poor close this week. So it's done a pretty good job to hold on to those levels. A break below this level here probably would see some weakness emerge. But while price stays up there in a relatively comfortable manner, I expect the Aussie dollar will hold on to this level as best it can in the near term. It'll certainly be under some pressure if the US dollar does push higher next week, as will all the currencies. Bitcoin futures. Bitcoin futures continue to trade in consolidation mode in this little green box that I marked quite a while ago now, a number of weeks ago. The market's not showing any great intent to move higher. It is absorbing supply. It's attempting to ward off a further breakdown. It did so up here as well, remember. Then there was an intentional gap down, trapping all these people into a weak position. And the market's now attempting to consolidate again through here. You really would like to see a down bar with low volume on it that looks something like this, with low volume down like this, to show you that selling pressure had eased. But at this point in time, the market is consolidating sideways and attempting to ward off any further breakdown. And that's still uncertain at this point in time. Back to the US dollar index futures just quickly. You can clearly see the market pulled back this week as an inside bar in consolidation mode. It held on to this level pretty comfortably. And it's pretty likely this market will attempt to push up to this level next week. It may even attempt to break out, but I think it'll come up to this level, or at least make an attempt to do so. Volume was low this week. Volume was reduced this week, showing you that selling pressure as price came back had eased. And that also suggests the market, given any sort of favourable trading conditions, will attempt to push higher in response next week. These markets are trading very reactive at the moment. They're not trading under their normal circumstances. They're reacting to what's going on as it happens in overseas markets and in the world economy at this point in time. And that's really causing these markets to trade in a less consistent fashion than they normally would do so. And that makes trading pretty difficult. Okay, thanks for your time. Back again next week. See ya.